All right, folks, let's start off by looking at the close for September 16th. So you see the Dow was down about 0.5%, S&P 500, NASDAQ down about 0.3% each, but the small caps were up 0.43%. That's a good sign for us because, as some people say, the small caps are like the canary in the coal mine, which means that they can pretty much tell you which way the market is going to go. So small caps were up today. Everybody else was down. Yesterday. Today, if small caps are higher and the rest of the index are negative, that probably means in the next couple of days, the Dow, the S&P 500, the NASDAQ are going to turn positive and probably hit new all-time highs. Let's see what the futures are doing. Okay. So the futures for the 17th. The Dow down 0.3. S&P 500 down 0.2. NASDAQ's down about 0.15. Small caps are down about 0.5. We'll see how this goes. Yesterday we were in 100% Harbor Capital. So even though the markets weren't down that much, as you saw, but we did lose about 0.6% being in Harbor Capital. So we just have to own the loss. There's a reason why we decided to stay with Harbor Capital. And I'll get to that in a moment. But let's look at some charts. Okay, if we start with the SPY, which is the S&P 500. Last week, the S&P 500, it did spike up to hit a new all-time high, but it did not close at all-time highs. So the red graph line you see is the 50-day moving average. The green graph line is the 20-day moving average. You see the 20-day moving average is about to cross over the 50-day moving average. That's a sign that the market is going up. So hopefully that continues for at least the next week or so. S&P 500 should make a new all-time high in the next week, unless we get something too crazy going on. Let's look at the QQQ. QQQ is the NASDAQ. You see the NASDAQ has the same setup. The 20-day moving average is about to cross over the 50-day moving average. Hopefully that's in the next week, and we can make new all-time highs in the NASDAQ. We'll look at the Dow. If you look at the Dow has the same setup. 20-day moving average is about to cross over the 50-day moving average, which should give you a new all-time high in the Dow. Small caps are behind still. So we want to really pay attention to what the small caps are doing. But the small cap has the same setup. 20-day moving average, the green graph line, is about to cross over the 50-day moving average, which is the red graph line. So even when the small caps 20-day moving average crosses over the 50-day moving average, small caps will not be at a new all-time high. So that's something to keep in mind. Let's show you why we decided to stay with Harbor Capital. One sec. Okay, folks, this is our graph of our returns for 2019. You see there's not too many large dips in there. Our previous high before a few days ago was in May. Our closing high for like a week. This is a weekly chart. So it closed at about 12.5%, even though our all-time high for the year was 14%. But the weekly close was about 12.5%, as you see in the chart. Then in September, we closed, our weekly close was actually a 15.14, but either way, it's still higher than what it was before. So with that being said, back in May, when we hit our all-time high, the markets were at their all-time high. You see in September, we hit our all-time high. The markets are not yet at their all-time highs yet. So we're hoping to hit our all-time high as the markets hit their all-time high. You see our current mix is, it says 100% large U.S. equity. That's just, it's a large cap fund. We're in 100% Harbor Capital. Okay, so our return, let me see what it was. I think our current returns are 14.51. Yesterday it was a 15.14, so we did lose some. But I like to compare it with the target dates. So a 2060 target date, you see the year to date, or year to date is a 17. Let's look at S&P 500. Year to date is a 21.35. Let's look at Harbor Capital. Harbor Capital is a 20.43. So, reason why we decided to stay is because every time Harbor Capital gets to about a 25% return for the year, it's at least at a new all-time high. So we're probably about 5 percentage points from Harbor Capital being at its new all-time high, but we're about 1.5% from the indexes being at a new all-time high. So my thought is, if we just stay attached to Harbor Capital, because Harbor Capital moves more aggressively as the markets move up or down. But if we're thinking the markets are going to move up and Harbor Capital moves more aggressively than everybody else, we should stay attached to Harbor Capital, at least for the next little while. And while everybody else might gain 1.5%, Harbor Capital is probably going to gain 5%. So that'll put us in a very good position. If Harbor Capital jumps up to 25.5%, we'll most likely be close to 20%. So you see how we quickly gained on it. We are slowly gaining on it. It's going to be very hard to beat Harbor Capital this year unless we have a huge decline, which I do think is coming, 10 to 14% decline. I do think it's coming. It had to come fairly soon, and then the markets will end at a new all-time high for the year. So I still think we're on track to get between a 25 and 35% return. And that should put Harbor Capital at about a 35% return for the year, if that happens. So thanks everybody for being patient. Remember, this is something very few people are doing. Very few people are, especially the professionals, very few are holding to the next day. They're not doing what we're doing. And they also don't move their stuff in 401k like we do ours. They do a lot of day trading. So we're trying to do something that very few people are doing. And if anybody's doing it, they're not publicizing it because it's very tricky. It's very hard to do in this risky environment. So comment on the videos, like the videos, share. And if you haven't yet, subscribe. Later.